And 72% of the time the market goes up. And the answer came to me. And that's when I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
And welcome to my podcast today. Thank you for joining me. A lot to talk about. Okay, now we knew what was going to happen. Big short covering rally today. And no one wants to get caught. Who wants to get caught with NVIDIA or any of the AI tech stocks if NVIDIA tanks? Now, no one believes that's going to happen. Everyone believes that, especially Wall Street, that NVIDIA is going to come out with giant numbers, and tomorrow the market's going to explode like crazy. But then the question comes, okay, so everybody is now buying bonds today, especially today. We saw everybody jump in, buy bonds. They're fearful in case NVIDIA blows up, and they want safety. So yields dropped big today. And if we have the earnings come out tonight and they're great, well, now everybody's going to unravel that tomorrow. So we're going to be right back to where we started. In other words, everybody's buying bonds. Now tomorrow they're going to be dumping bonds. And then that means yields are going to go right back up to 4.6%, putting us right in the jam we've been with these high yields. So it's an interesting question. If NVIDIA does have great numbers tonight, then aren't we just right back to where we started? Well, of course you are. But the one thing that's wonderful about yields always tell you the truth. Unlike a guy like Payne. Play that cut.
What do you make of all these numbers? You do this every day.
It's you started off talking about a temperature check. I say sizzling. That's the temperature, sizzling.
Sizzling, yeah, sizzling, okay. Unbelievable. Anyways, yields are a wonderful thing, especially the yield curve, and they make that really complicated so they don't want you to understand what it is. It's real simple. A yield curve just measures a bank's profitability so that you can, before you're in, remember, banks, everything, banks, the backbone of our whole economy, our small businesses, they got to be profitable. And so you always want to make sure the yields or the banks are profitable. You look at the yields, and as long as they're at 150, then the bank's profitable. But if they are where they are today, matter of fact, they got worse yesterday. We were at 70, then we went down to we were at minus 70, then we got worse, down to minus 73. So at least when you look at the yields, you can see what's going on. You can see the banks are weak. They're not performing. They're doing terrible because the way things are. I mean, people are scrambling. They're having trouble. So the yields will always tell you what's going on. And that's what happened today. Let me give you the sequence. So we all knew this morning on the opening, everybody's going to be doing short covering on the 12 stocks that keep the whole market up. Those are, of course, the stocks, the 4 stocks that make the machines, that make the chips, and then the 8 companies that buys all the chip machines. And so everybody jumped in and started to cover their short positions. They didn't want to be short anymore. And then they also took their money and they threw the money at the banks as a safe haven. Not that the banks were going up, it's just as a safe haven. Now, that's another thing, too, because the banks are in really bad trouble. And as I said, we saw the credit spreads widen today. We saw them, get worse, I should say. And the yield curve's getting worse. And also the credit spreads, okay, right now are okay. They're telling us the banks are all right. We're not going to have a 2008 crash. But safety's one thing, but are banks making money? That's the second thing, and the yield curves are telling us no. So today, when the yields told the truth, all of a sudden, remember, yields will tell you the truth, what your economy's doing, The small mid-cap stocks, IWM confirms it, because when IWM, those small mid-cap stocks go down, what happens? Why do they go down first? Because that's where all the institutional money, where you have the 13 biggest institutions in the world with about $18 trillion, they're the ones that fire up the market, fuel the rallies, or make it crash. And so right now, as I said, the yield started to drop today. So again, what happened is tech, everybody started to cover their short positions in tech because they're fearful. And NVIDIA earnings, okay, everybody knows they're going to come out with great numbers, and they just don't want to get caught in case they don't come out with great numbers. The second thing that happened today, once we had the yield drop, okay, the next thing was that's a message to the to oil that you better start dropping, because that means the demand is not going to be there. So the second thing that happened is we had oil collapse today. So we had the yields drop. I mean, first thing we had is, as I said, investors going in and buying back covering their short positions. The second thing happened, the yields started to fall like crazy, and then oil started to collapse. So NVIDIA, again, controls the entire AI narrative and has the biggest, this is going to be the biggest earnings event ever tonight. People don't understand what happened if these earnings disappointed, but this is a huge, huge earnings event tonight. So shorts are covering like crazy, and NVIDIA itself and the 12 other stocks that are related to the machines, chip machines, and the people who buy them. And after the oil started to collapse, we started to see how and the reason people are nervous is that the trades are really crowded, and the leverage, the margin debt, people borrowing $850 billion to buy these same 12 stocks. I mean, it's insane, isn't it? So you had, all of a sudden, yields started to drop, oil started to drop, institutions, again, kept on shorting. And and also remember, there's other stocks besides the 12 chip makers, machine makers, and the 4 companies that build the chip machines, and there's about another 8 that buy those machines. We also have AMD, Micron, Broadcom, Taiwan Semi, and we have SMCI. So these are other stocks that everybody was, covering their short positions and having the market rally today. Although the S&P really didn't do too much today. Okay, I mean, I shouldn't say it didn't do too much. It went up, but I'm saying I thought it would go up a lot more with the tech. And XLK, okay, it went up today, but I was looking for a bigger day today. But anyways, so we have, again, all these tech stocks rallying right now, and investors are rotating the treasuries like crazy, and that's why we had the big yield drop. And we went from 4.68%, 4.68 down to 4.58. That's huge. That's huge. And then Mr. Yield told Mr. Oil, hey, you better start dumping your oil price. You're going to get caught. And so oil dropped to $98. It didn't drop. It collapsed, okay? And again, and the reason why oil's collapsing is because the demand is collapsing. Demand expectation is collapsing. Growth, GDP growth is collapsing. Global slowdown, risk going up like crazy. But we're told, everything's just wonderful and the economy's sizzling. Now, after today, here's the thing. You know that today, if you go and you look at your tech stocks, I'm just going to do this for a second here. I don't want to bore you with this. But if you go look at the tech stocks, especially the machine makers, chip machine makers. So like AMAT and AMAT had a good day, no question about it. But we didn't have a lot of volume today on AMAT. I thought these stocks would do a lot better. And LRCX, that's another one. That had a good. You all had good days today. But I hope you didn't go in and buy them on the dip. This would be the worst thing in the world if you went and bought these today, unless you're a day trader. But if you're an investor and you bought these today on a dip when there's no QE, you got to be out of your mind. Never buy on the dip. It's a losing game because, again, there's no QE. You don't have QE under you. We bought on dips through QE because money was free and it was a guarantee they're going to push, the Fed was going to push the stocks back up. So again, it was curious why these stocks didn't go up more. But what's going to happen 2 days, 2 weeks, when yields are back up? And they're going to go back up because all the bond buying today is going to unravel tomorrow, maybe 2 days. And we're right back to where we are. What's going to happen then? Well, this new rotation is going to start, and we're right back to going into the risk zone on, of course, the yield. And at 4.5 is your risk zone. And remember, we went from I think it was April 20th to May 14th, okay, from 4.25 to 4.5. And you're hitting that risk, and it blew right through that. It keeps going up. So we're going to be facing a new rotation. So that's why you got to know how to buy stocks, but you got to learn how to sell stocks short, okay? Because the stocks that are going up today are going to be going down the minute. Remember what's going to happen. This is short term. When they bought all the bonds today, right, and yields dropped. So people got out of those stocks, all right? Now what's going to happen is, when they bought the bonds today, the yields went down and all these stocks, tech stocks, right, went up. Now within 2 days, people are going to take their bonds, who bought bonds, and they're going to sell them. So now these stocks that rally today, especially the tech stocks that rally today, they're going to go the other way. That's why you got to know how to sell short. That's how you make money. You catch it on one side and the other side. But when we get this new rotation out of today's bond buying back into tech, the same 12 tech stocks, the same bank stocks, because yields will go back up. I mean, this is kind of crazy. We're going to be right where we started. So again, these yields are going to rise, big time. And so you got to know what you're doing, all right? And these, you just can't be staying with these same 12 stocks, these same AI tech stocks, let's say 18 of them the most, without knowing how to sell short. So NVIDIA, we're going to see what happens tonight. I think they're going to beat very big. And we're going to be told tomorrow, don't worry about yields anymore. Who cares if yields are 4.6, 4.7? Who cares if they hit the kill zone? There's such demand for AI. Don't fall for that, okay? Now, if you held on your stocks and you get lucky and tomorrow morning, tonight, the earnings beat, right? That's a good thing, right? But sell into the rally tomorrow. This is where everybody's going to make a mistake. They're going to have a big blowout tonight. Big numbers are going to come in. They're going to rig it to make sure big numbers come in. And then as the stocks take off in the morning, if you own them, you should be selling into them. And then if you knew how to short, you could turn around and short them. Just do a day trade on the shorting. But here's what's going to happen. When these things rally, okay, and tomorrow everything blows up, that's going to be just maybe, I don't think it's going to be more than 2 or 3 days. Because remember, on the other side, you got to remember, wait a minute, everybody bought bonds today because they're scared that doesn't happen. So think about how this is going to happen. So everybody's buying bonds today, and tomorrow they're going to dump their bonds. And if you knew how to buy and sell short, think of the money you'd make on both sides. So this is going to be a very interesting earnings, because we never had an earnings like this. Like, the whole world is waiting to see what happens with NVIDIA. And then, of course, you got these same 12 stocks that make up 70% of the S&P gains. So be careful, and remember, as soon as these bonds, these yields, they'll start climbing again. We'll be right where we are today. Phil's Gang, check us out.